All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Tuesday, everybody. Today is October 8th, 2024. The top story this morning is China. The market has reopened in China. They were shut down pretty much all of last week for the Golden Week holiday. And of course, they closed the market amid a monster rally on all of these stories, anonymously sourced stories about this monster stimulus, the fire hose of stimulus, the bazooka of stimulus, the tired and overused metaphor of stimulus. It was finally here. We finally heard so much about it, and the market was ripping. The CSI 300 rallied 24% in 5 trading days. It was unbelievable. And then yesterday morning, or while we were sleeping, yesterday morning in China, the CSI, opens up another 11%. It seemed like we were poised. The China monster rally was continuing, as it looked like we were set to do, because while China was closed during the Golden Week holiday, the Hong Kong market was still open, and the Hang Seng Index had continued to rally while Chinese stocks were closed. And so all indications were the Chinese market would keep rallying, and that's exactly what it did when the market opened. And then China's regulators started to talk, and the whole market went, oh. You see, we were promised hundreds of billions of dollars, trillions of yuan worth of stimulus. 100 billion here, a trillion yuan there, a trillion yuan there. We're going to buy back all the homes, infinite backing for loans for local governments to buy unsold properties. I mean, it was basically 2020 all over again in China. They were talking about as much stimulus, or at least relatively similar quantities of stimulus, as the Fed and the Treasury produced here in the States in the 2020s, the earlier part of this decade. And so the market started rallying. But what did we actually get? We got about 200 billion yuan. They announced they're pulling forward some federal government spending, as well as another 100 billion yuan for financing construction projects. 200 billion yuan. That's what they announced yesterday, or about $28 billion equivalent. That's it. $28.3 billion. After all of the anonymously sourced, and guys, I always grind my teeth and I roll my eyes whenever there's anonymously sourced articles, right? This guy named People Familiar with the Matter, he's sourced in everything. I mean, this guy's all over the place. Apparently, People Familiar with the Matter is a fly on the wall in every boardroom around the country, because Bloomberg and CNBC and everybody else in the press, they refer to this guy, Mr. Familiar with the Matter, over and over again. And then, of course, it turns out, well, maybe the reason why people won't attach their names to what they're telling these reporters is because they don't want their name attached to it, because maybe what they're saying is BS, or maybe it's not actually carved in stone and it's just something some guy said in a meeting somewhere and it's not actually policy yet. This is why we usually attach names to quotes. It gives more meaning. People are staking their reputation on what they're saying, and anonymity allows people to say whatever the hell they want with no accountability for it. And, well, a lot of people piled into Chinese stocks based on anonymously sourced articles. And, well, they were regretting it yesterday. Now, how much were they regretting it yesterday? Let's put this all in perspective, right? The CSI 300, it opened up 11%. And then, of course, after this meeting, it started to sell off. It still closed up 5.9%. So it was up majorly on the day. And 5.9%, guys, that's like a 1,500 to a 2,000 point move in the Dow. So Chinese stocks were still up big yesterday, but the Hang Seng, the Hong Kong index, it got crucified yesterday, losing 9.4%. So is this Chinese holiday, is this big honeymoon period of post-stimulus rumor, is it over? I don't know. The Chinese authorities didn't say they were done with their stimulus announcements. All I know is what we got yesterday was a far cry from what we were promised in the press, and Chinese stocks started selling off because of it. Also going on, guys, Hurricane Milton is a monster. Get out of its way. I've heard from a couple of viewers in the Florida area who are very wisely taking precautions, like getting out of town, moving further inland, getting out of the way of this thing. It had strengthened to a Category 5 yesterday. Thankfully, it has weakened now. It's down to a Category 4. It's run into a patch of dry air and a little bit of wind shear that is supposed to sap some of the energy out of this storm. hopefully a lot of energy, but right now it's scheduled to make landfall between 5 and 9 p.m. tomorrow as a Category 3, which is still a major hurricane. It's going to bullseye Tampa. It's going to be a big problem, guys. And look, the Southeast is already still reeling from the punch of Hurricane Helene. So pay attention to what the authorities are saying, guys. And, of course, always have emergency provisions available for yourselves to take care of you and yours. Don't sit around and wait for the government to come to your aid. You never know how long you're going to be sitting there. Also, Pepsi was out in the news this morning. They trimmed their revenue outlook on weaker sales in the U.S. I was talking to my moderator, Mish, about this one. I said, hey, Mish, what's going on? Is this health of the consumer, or is this just the Ozempic thing going on again? You know, the injections that magically make us all skinny, and we're all pretending like that's not going to have horrible, horrible health consequences down the road. Yeah, a little bit of both probably. Look, these magic weight loss injections apparently are taking a big chunk out of the sugary drink in the snack markets. So there's that going on. Plus, you've got consumers who are strapped and are trading down, buying the lower shelf, off-brand or off-label stuff, whatever you want to call it, the generic stuff. You know what I mean? The Mr. Pibb instead of the Dr. Pepper. Either way, that translates into lower sales for Pepsi. So that one's taking a little bit of a hit this morning. Samsung came out with earnings. Now, Samsung's earnings were interesting because it was monster growth, huge bumps in revenue off of their memory chip sales. But the problem is the market was expecting a much bigger bump in their revenue. So Samsung earnings were actually majorly disappointing despite surging growth there. The company actually said they were sorry on their earnings report. That's a new one. Supermicro Computer was in the news yesterday. You got to love this one. Supermicro, remember, guys, the company has not filed their 10K after Hindenburg Research came out with their short report on SMCI. That was largely based on the research of the Orca Finn, a Substack guy I've mentioned on Twitter a couple of times, basically proving, hey, this company with a documented history of accounting fraud and settlements with the SEC for that accounting fraud and getting delisted by the NASDAQ for accounting fraud, that they hired back all the frauds who they fired after the accounting fraud, and then they brought them right back in and they started doing fraud again. And then their auditor wouldn't sign off on their books, so they delayed their 10K. We still haven't gotten the 10K from them. They've been given non-compliance notices from the NASDAQ. Means, hey, we're at risk of being delisted here. They're under a probe by the DOJ. But they put out a press release yesterday that said, we're selling a lot of GPUs, yay us, and people piled into the stock like crazy. That stock rallied 15% on the news yesterday. A company run by frauds that is basically, at this point, it is so obvious that they are committing accounting fraud, but people don't care because, oh, well, the CEO, their lying CEO said a thing in a press release, number go up. This stock is like the question mark on Ron Burgundy's teleprompter. I've used this metaphor a number of times. This market will literally buy anything. Anything you put on the screen, they will buy. It's what happens when you print $7 trillion and dump it into the market. People start paying for crap like this. It's not going to end well. So good luck. Congratulations if you made money on SMCI. The company's a fraud, and it's probably going to end up getting delisted again. But in the meantime, enjoy that number go up, baby. Speaking of AI and frauds, Pharma Bro Martin Shkreli back in the news. The Supreme Court rejected his appeal to his $65 million fine that he's got to pay. This guy who loves to brag about how rich he is and how much money he makes. Well, you owe the government $65 million. Couldn't have happened to a nicer guy. And last but not least, Airbus is in the news. More trouble in the plane market. We've heard a lot about Boeing this year, but Airbus has been having their struggles as well. They are way behind on their deliveries for the year because of part shortages and supply chain disruptions. What year is it? Is it still 2021? I thought the supply chain stuff was a very that's so earlier part of this awful decade. Apparently, the plane industry never got out of the supply chain woes that were plaguing the car industry and a lot of other industries, the shortages of early 2020s. And Airbus is having trouble getting the parts they need to meet their deliveries. That's on top of all the problems Boeing has. So, guys, plenty of problems going on in the plane industry, something to keep an eye on. Also, Hurricane Milton might drive up fertilizer prices. That's something to watch out for. We got a lot to talk about. Let's shrink my big melon of a head and see what's going on in the market this morning. Don't forget that like button for the algorithm if you so please. And if you're new here, hit that subscribe button and come have your coffee with the melon heads every morning as we go through markets. The S&P 500 is up about 23 points, 0.4% higher ahead of the opening bell. We've got the Dow up 0.13%, 55 points higher ahead of the open. And the NASDAQ is up 80 points, 81 points, 0.4% higher for the NASDAQ. Stocks are up across the board this morning. We got a slightly weaker U.S. dollar. The DXY is at 102.47. That's down 7 basis points. That'll put a little bit of upward pressure on stocks there this morning. Looking at the bond market, we have got a mixed bag in yields today. The long end of the yield curve is higher once again. A little bit of a dip there in the middle. The 30-year is at 4.336. That is up 3 more basis points this morning. The 10-year, 4.057. Almost another 3 basis points for the 10-year, guys. It has just gone up and nothing but up since the Fed cut. The 2-year, meanwhile, taking a little bit of a break here, 3.99. That's down 1.5 points. The 2 have had a pretty impressive run here. And meanwhile, the 1 month is at 4.843. That's down almost 2 points here. And my buddy, Mighty Mike, who sent me a super chat, by the way, we're going to go a little out of order. Thank you very much, Mighty Mike, for the super chat before we even got going this morning. Says the 2-year has spiked 40 points in just 6 days. And I wouldn't have believed it if I hadn't looked. Zoom in right here, guys. Yeah, look at that. Not even 6 days, Mike. Really? Most of that 40-point jump came in just 2 or 3 days last week. Of course, Friday on that jobs number, that was the big green candle right there. Interest rates moved sharply higher on that big blowout jobs number. Look, there's 2 ways you could look at that jobs number. The Fed made a mistake with the 50 basis point cut, and so they're not going to be cutting anymore. And so the market was repricing expectations for lower rates. That took the 2-year higher. Or another way you could look at it is you could say maybe all those jobs really did magically appear, and maybe inflation is coming back and people have higher inflation expectations, and so they're demanding a higher interest rate for loaning their money to the government for 2 years. Either way, interest rates moved sharply higher on that news on Friday of that jobs report. And guys, look at the Fed's expectations here. This is CME Fed Watch. This is the likelihood of what interest rates will be coming out of the next FOMC meeting. Now, we've got an 86% likelihood of a 25 basis point rate cut. Saying interest rates will be 450 to 475 after the next FOMC meeting. A 50 basis point rate cut does not even register as a fraction of 1%. But look at this. No rate cut is now almost 14% likelihood. This is marching up a little bit every day. This was not even registering on the chart before Friday. Then it was like 2 or 3% after the jobs number on Friday. Here we are on Tuesday. It's almost 14%. So keep an eye on that no cut from the Fed likelihood there. Right now, it's still a long shot, still looking at probably 25, but that would be the Fed admitting that they made a mistake after they made a mistake if they cut 50 and then do nothing at the following meeting. So thanks again, Mighty Mike. I appreciate the super chat, sir, and the support of the channel before we even got the stream going. And let's carry on from there, shall we? As soon as I get back to my chart. Okay, we were looking at bond yields. Now look at commodities. We've got metals are a little lower here. Probably those higher yields playing a role. Gold is down $1 here for spot gold at $26.41. Down a little bit this morning. Spot silver at $31.16. That's down big again here. 53 cents lower for silver, or about 1.7% to the downside. We've got copper lower by 2%. Probably that weaker than expected Chinese stimulus contributing to some cheaper copper prices. That's also putting a little pressure on oil this morning. Platinum is down 1.4%. Palladium is down 1.2%. Is red everywhere. Even crude oil currently down almost 3% here. WTI futures for November are trading at 74.84. That's down $2.30. Now, let's talk a little bit about some commodity news. We had this one in Market Watch this morning. Why the great gold rally is in danger of petering out. That's interesting here. Gold is vulnerable to the downside, a strategist says. The bet on China's economic stimulus hit a big stumbling block on Tuesday after authorities held a press conference without announcing any big new measures. Whether China bulls like David Tepper, who did say he wanted a pullback, will use it as a buying opportunity or a signal to take profits remains to be seen. But one other high-flying asset, at least this year, has been gold, driven by expectations of big Federal Reserve interest rate cuts, as well as foreign government fears of further U.S. confiscation of assets. I don't know how real that fear is. I know there's a lot of people selling that fear, but I don't think the average person really buys that. Gold has been driven to record highs and made it through the first 3 quarters of the year as one of the best performing assets ahead of even U.S. stocks. But rallies don't go on forever, and over the last few weeks, gold has been trading sideways. Christopher Watling, the chief market strategist at Longview Economics, says rising U.S. bond yields and the suddenly buoyant U.S. dollar have put the brake on gold's rally. And this chart that they're showing here is showing in red. That is the U.S. dollar index inverted, or the DXY. So you can see as this number moves lower, that is the DXY heading higher. Look, guys, the dollar has been a little bit stronger in the last week or two. We've gone from, threatening to break below 100. Remember, this index is inverted. So as this was rising, that was the dollar weakening. And then the last couple of days, pretty much since the jobs report, we've seen the dollar strengthen quite considerably. And then you got the gold chart there in black. That is not inverted. You can see ever since the dollar took that nosedive in red, gold has kind of somewhat followed. Higher rates, stronger dollar, just not good for gold prices here. But he's also saying here that speculative positioning is crowded, measured sentiment is bullish, and technical indicators are at or near their sell thresholds. So he's saying basically the gold market may have gotten a little bit frothy now that we've got higher interest rates and a stronger dollar. Expect a pullback in gold. We've kind of had that. It's been a little bit of a pullback. We were threatening to go to 2,700 a few days ago. Now we're down around 2,640. Now, let's talk a little bit about the China story here. China announces more support for economy, but holds back on major spending package. We finally have an actual announcement from the government, not just anonymously sourced stuff. And it's amazing how the story has changed. China's Economic Planning Agency outlined details of measures aimed at boosting the economy on Tuesday, but refrained from major spending initiatives. The piecemeal nature of the plans announced on Tuesday appeared to disappoint investors who were hoping for bolder moves, and Shanghai's benchmark gave up a 10% initial gain as markets reopened after a week-long holiday to trade just 3% higher. The head of the National Development and Reform Commission said the government will front-load 100 billion yuan, that's about $14.1 billion, in spending from the government's budget for 2025, in addition to another 100 billion yuan for construction projects. So all told, that's a little bit more than $28 billion, about 200 billion yuan there. The scale of the spending overall was well below the multi-trillion yuan levels that analysts said might be expected. And so that very disappointing announcement, look at what it did to the market. This is China's CSI 300 yesterday. And look at this candle here. The market opens up 11% to start the day. We go through a few hours of trading. And then let's shift this to 1 hour candle, shall we? And then you can kind of see what happens. We had that initial announcement. Market opens much higher. Then we get the announcement from the finance ministry, and it just trades lower for pretty much the rest of the day. Now, it did end up closing in the green. It was still up for the day, despite that big, how do I get rid of this? There we go. Despite that big red candle, it was still up for the day. Now, look at the Hang Seng, though. The Hang Seng index closed pretty much at the lows of the day, selling off about 9.4% lower than they closed on Monday, September 30th, before the Golden Week holiday. So stocks in Hong Kong just got absolutely bludgeoned on this news. Same thing with the CSI 300 and the Shenzhen, although those both still closed in the green. We'll see where we go after a few more days. Maybe we're going to have this piecemeal, this drip, drip, drip of stimulus over the next few days. And maybe the total will, in aggregate, amount to something like the few trillion yuan that the anonymously sourced articles were promising. But so far, the China stimulus has been a dud, and the stocks rallied pretty extensively off of the rumor of that dud. Also, guys, be careful with this one. Hurricane Milton approaches Florida with 155 mile per hour winds. This thing is a monster. It became a Category 5 yesterday. It has thankfully weakened a little bit here, but take this one seriously. Hurricane Milton is set to approach the Florida Peninsula as a catastrophic Category 4 storm, bearing down on a region still struggling to recover from Helene's devastation. Milton's top wind speed slowed slightly to 155 miles an hour. Slowed to 155 miles an hour, guys. That's pretty incredible. The U.S. National Hurricane said in its latest advisory, the system is expected to glance off of Mexico's Yucatan Peninsula on Tuesday before heading towards Florida on Wednesday. While fluctuations in intensity are expected, Milton is forecast to remain an extremely dangerous hurricane through landfall in Florida. Now, landfall will be sometime between 5 and 9 p.m. tomorrow night, guys. And all we can hope is that this dry air and this wind shear that is in the path of this storm is going to sap as much energy as possible. But either way, even a category 3 making landfall in Tampa is going to be a real mess. So thoughts and prayers with all the folks in Florida, guys. Please heed your evacuation warnings. Don't complicate matters. I've already heard from a couple of you guys that are in that area who are getting out of Dodge. Good luck to you guys and your families. And something to keep an eye on besides the human cost of these storms, guys. Hurricane Milton's threat to phosphate production. Shout out to my moderator, Mish, who caught this one this morning. They're worried about fertilizer prices because of this storm. On the heels of Hurricane Helene, Hurricane Milton appears to be headed for Tampa, an epicenter of phosphate production, according to Josh Linville, the vice president of fertilizer at StoneX. He's saying we have to worry about all the people down there. This could be the first major hurricane to directly hit modern Tampa history. But then you start to think about all the production, all the storage, everything that's in that area for the phosphate market. It's 3 or 4 weeks before fall plantings begin. This isn't good, he says. Linville says the price of phosphate has been high in comparison to grain prices, and inventories of the product are already tight. I'm never going to sit there and say, oh, you're not going to be able to find it. It won't exist, he says. You'll find it, but you might not like the price and you might not like the timeline. For those who have already locked in their orders for phosphate, Linville doesn't believe there should be any necessary concern for those contracts changing. So probably not an immediate concern, guys, about the storm, but a lot of fertilizer production happens in this area. Fertilizer prices are already high. Grain prices are already low. So this is not going to make things any easier for our farmers. Also going on this morning, we've got Pepsi trims revenue outlook as North American snacking and key international markets lag. We're going to blow through this one a little bit here, guys. Net sales fell 0.6% to $23.32 billion. Organic revenue, which strips out acquisitions, divestitures, and currency changes, rose 1.3% in the quarter. So organic revenue is up, but below the rate of inflation. So that means lower package volumes, people buying less stuff. Demand for Pepsi snacks and drinks dropped this quarter. The company reported that volume for both its food and beverage divisions declined by 2%. Last quarter, executives said shoppers across all income levels are changing their behavior. So you probably got the lower class or the middle class, the poor who just can't afford the stuff. And then maybe you've got the wealthier people who are paying $300 for fat-burning injections, no longer feel cravings for sugary drinks. Either way, things not good for Pepsi here. That stock is down about 0.2% ahead of the opening bell this morning. We also got bad news from Samsung. Samsung posts disappointing third quarter profit guidance as it grapples with AI chips. Now, the word disappointing needs to be kept in context here, guys. Samsung saw incredible growth in this quarter. I mean, just up several 100% from a year ago. But the problem is the market was expecting even better. And much like all the problems with this AI mania, these expectations are just ridiculous. Absolutely obscene numbers being thrown around by these snake oil salesmen, CEOs, who honestly, guys, know very little bit about technology, but they do know a lot about raising capital and selling stock. And so they just keep making grander and grander promises. And when you don't deliver on those, their stocks get clobbered. South Korean tech giant Samsung Electronics said on Tuesday that it expected worse than expected profit for the third quarter. And its guidance for the quarter, the world's top memory chip maker said operating profit is projected to come in around 9.1 trillion won, marking a surge from last year's 2.43 trillion won. Now, guys, that number, let's put that in perspective. 9.1 over 2.43. That's a 374% increase, or 274% increase from a year ago. More than tripling their profits. All right. So that is incredible results. But look at what the market was expecting. Analysts polled by LSEG expected operating profit of 11.456 trillion won, or 7.7 billion for the quarter ended September 30th. The expectations just ran wild. And now the stock is coming back down to earth. I mean, they still delivered fantastic results, but not good enough. Now, the stock was down 1.1% yesterday. This one is not trading pre-market right now. I expect this one's probably going to be down on that news. We'll see how much. But right now, Samsung, this is priced in Korean won, 60,300, down about 1.15%. And in the most ridiculous story of the week, Supermicro shares soar after server company says it's shipping over 100,000 AI GPUs per quarter. Do you think anybody ever stopped to ask and said, wait, Supermicro doesn't sell GPUs, though. They just build the server racks that the GPUs go in. So Why are we counting the number of GPUs they ship? It's not a GPU company. It's a server company. Oh, asking questions. What a silly thought. Just buy the stock and wonder about it later, right? That's the message from Wall Street. Supermicro shares jumped 15% after the computer server company said it's shipping more than 100,000 GPUs used in artificial intelligence per quarter. As one of the biggest beneficiaries of the AI boom, Supermicro makes computers that companies use as servers for data storage websites, AI training models, and more. However, the company is about 9 weeks behind in reporting its annual report, which was expected in August. Remember that pesky little detail, guys, about the annual report that they didn't file, probably because their auditor wouldn't sign off on their books, probably because of that short seller report from Hindenburg Research that was probably based on the research by the OrcaFin, that it probably definitely shows that Supermicro is a massive fraud that is just lying across the board, that they have a documented history of fraud and they fired all the people who did the fraud and then they rehired them as soon as the SEC left the building and they came back in and shocker, they started doing the fraud again. People forgot all about that. That story isn't even a month old. Everybody forgot all about it and just piled into the stock yesterday because they said they're shipping 100,000 GPUs and they don't even make GPUs. They buy the GPUs from NVIDIA and put them into their racks. Apparently, the number of GPUs Supermicro ships is a big deal now. Look at this stock, up 15.8% yesterday, and it's up another 5% today. Enjoy this one while it lasts, guys, because it's only a matter of time before this thing gets kicked out of the S&P 500 for failure to file their reports. They've already been given a non-compliance note from the NASDAQ. They're already under a Department of Justice investigation for accounting irregularities. Oh, I'm sure things are going to end very well for Supermicro Computer. Also going on this morning, speaking of the AI mania, one of its biggest champions, Pharma Bro, Supreme Court rejects Martin Shkreli's fine appeal. Couldn't happen to a nicer guy. The Supreme Court on Monday rejected a bid by notorious Pharma Bro Martin Shkreli to hear his appeal of a $64 million penalty on the fraudster. That's right. He was convicted of 2 counts of securities fraud. I'm sorry, 2 counts of securities fraud and 1 count of conspiracy to commit securities fraud. Shkreli had been ordered to pay the penalty for blocking competition to a life-saving drugs whose price he had raised by more than $700 per pill. Shkreli's request that the Supreme Court take his appeal of a federal court decision on a lawsuit by the Federal Trade Commission was his last chance to overturn that penalty, which was related to the drug Daraprim. The Supreme Court, in rejecting that request, did not explain its reason for doing so, and there were no noted dissents by any justice to Monday's order. So let me summarize what the Supreme Court said. They said, get this a-hole out of my courtroom, and even we 9 judges who notoriously disagree on every major issue, we are united in agreeing that screw you, Shkreli, you can pay your $64 million fine, and then you can go on bragging on X about how rich you are. Couldn't have happened to a nicer guy. Also, Airbus 2024 delivery goal becomes a stretch as supply woes bite. A lot of problems in the airline space, guys, and a lot of problems at Boeing, and Airbus apparently is having theirs too. Airbus already reduced their annual delivery goal and has increasingly become a long shot as handovers in September have left the European company with a gap for the final 3 months that will be a stretch to fill even at a higher rate. The company probably managed to get just 50 jetliners to customers last month, according to people familiar with the figures. Such a number would bring deliveries after 3 months to about 500, leaving Airbus with a gap of 270 planes toward its annual goal of 770 deliveries. While the pace tends to pick up toward the end of the year, Airbus would have to consistently hand over more planes in each of the last 3 months than it has managed at any point in 2024 so far. The highest that Airbus managed in 2023 was 112 deliveries in December. So it's not impossible, but it's going to be hard for them to do it. Now, on Tuesday, aerospace parts maker Senior PLC said it would cut jobs and spending due to lower near-term handovers to Airbus and its U.S. rival Boeing. The U.S. plane maker has been additionally affected by a crippling strike that shuttered output of its cash cow 737 MAX jetliner. So there's a lot of problems in the supply chain, in the airline industry, in these plane makers. Boeing's having problems. Airbus is having problems. They just can't get the planes made. They're supposed to deliver 770 this year. They're still 270 short, and they've only got 3 months to do it. Not impossible, but it's going to be a stretch. Airbus stock is down about 0.5% today, trading at €126.68. This one's priced in euros. So that's about all I got for you guys today. I want to say thank you very much to Mr. Water 168. Says, Jack, I know it's off topic, but can you please do an intrinsic value of ticker DJT based on its current financial statements? What is it truly worth? Thanks. Look, I haven't done a deep dive on DJT. I haven't looked at their financials. I don't know how much cash or debt the company has. My opinion on DJT Water 68 is that the entire business case for that company went up in smoke as soon as Elon Musk bought Twitter and renamed it X. I think the prospects for Truth Social just vanished when that happened. The whole reason Truth Social was a thing, a lot like Gab, a lot like Getter, a lot like a lot of these other alternative social medias that have sprang up and become rallying points for conservatives because of the censorship that was happening on other platforms like YouTube, like Twitter was doing, like Facebook. The whole reason Truth Social became a thing was because conservatives were getting censored on the big Silicon Valley dominated tech platforms. That changed when Elon bought X. Now that Twitter, through the Twitter files, that they have blown open the door on what the government was doing, how they were conspiring with private business to censor political speech. And then Mark Zuckerberg has since confirmed that they were doing that and apologized, even though he's trying to cosplay as a libertarian now. I don't buy that, not one bit. But as soon as Elon Musk did that, the business case, the reason to even have a Truth Social account just went away. So the only people who are really out there on Truth Social right now, and this might upset some people, guys, but this is just my honest opinion of it here. The only people who are on Truth Social right now are your diehard Trumpers, and there's just not enough of them to really sustain a major social media platform. And when all the people on your platform are of a single thought process and a single mind, it's not really an effective platform for the free and open exchange of ideas. It's just an echo chamber. And so I honestly, without getting into the financials of it, in my opinion, the intrinsic value of DJT is almost nothing. Now, maybe Trump, after his political career is over, he's able to change that and Trump media does do something. Maybe he comes out with a TV channel or something like that. But right now, Truth Social as a business model, I think Elon Musk killed it. And I'm actually kind of surprised Trump and Musk are getting along so well right now because Elon basically killed his business. That's just my take on it. Like I said, I haven't dug into the financials, Water 168, but thank you very much for the super chat, and thank you for supporting the channel. And thank you to Eric Rocks. That man is a stone-faced killer. Get it? Thank you, Eric Rocks. I appreciate the super chat. I didn't see a question in there. Let's see. Is Eric anywhere in there? Oh, here we go. I am reminded of the fertilizer joke Reagan told about the Dems. I'm considering buying puts on SPY. Join me, he says. I'm not short in this market right now. This market is frothy. Don't stand in way of a mania. That's my approach right now anyway. All right. Like, look, guys, my sentiment is very bearish. I'm not very optimistic about the state of the economy, the direction the country is moving in. That being said, when the Fed is in easing mode, get out of the way. Don't fight the Fed. That's just my opinion here. Now, maybe we are at risk of a major issue. There could be a liquidity event. There could be World War III could ignite, fuel prices heading higher. Inflation could come back because the Fed started easing again too early. All of these things are existential risks. That being said, I'm still not willing, with stocks making new all-time highs pretty much on a weekly basis, I'm just not willing to stand in front of that freight train and bet my life that it's going to stop. But thank you, Eric Rocks. I appreciate the super chat and the support of the channel, sir. And thank you, all you wonderful Melonheads, for having your coffee with us this morning. Thank you very much to my magnanimous Melonhead supporters on Patreon and YouTube. You guys are awesome. Links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.